The wide agreement in this space is that this is the worst situation crypto has ever seen, or certainly that crypto has seen in a very, very long time. We're talking more than 5 years. And that begs the question for anyone that's paying attention, why isn't Bitcoin lower? Bitcoin took one clear leg down. We've now been trading more or less sideways for nearly a week. We're holding our price levels, and I mean, FTX just went down, guys. I mean, this is, in terms of US dollar loss and so on, way bigger than what happened to Mt. Gox. Obviously, much more significant than what happened to Mt. Gox, with Mt. Gox as well, because the crypto space is bigger. There's a lot of reasons to be worried, but the market ain't dumping. And this is something that we've been speaking about on this YouTube channel for quite a bit. And I want to tackle this question head on. I've talked about two key reasons for why the market might not be dumping, but there's one more that I saw with this tweet. This tweet right here by Donald. And I want to highlight this for you guys. Donald asked the same question. You guys know I've talked about him in the past, one of my favorite accounts on Twitter. He mentioned, 3 possible reasons for why the fuck we didn't dump harder. Number 1, is it because people are complacent about the contagion FTX is going to cause? We're going to break each of these down. Number 2, this is the one that I didn't really think about, but we have some interesting data for this. Is it because smart people are buying right now? And number 3, this is the other one we've been talking about a lot. Is it because traditional markets are doing somewhat well? Now, this traditional markets doing somewhat well thing, this might have just gone out of the window. I know this doesn't look particularly bad, but literally just like 20 minutes ago, half an hour ago, this news of 2 missiles possibly from Russia. 2 people being killed possibly from Russia, with missiles entering Poland. Now I don't like this. It's generally not something that I'd pay attention to, but it kind of looks like it might be real if we look at what's going on with US oil. It's spiked up a little bit. I mean, is this normal price action? I don't know. I don't really look at oil, but if this turns into something, and I don't want to jump to conclusions, but if this does turn into something, then this could really dump the markets. But we're just going to do this video. I only saw this, minutes before I started recording. I'm just going to do this video as I planned. And the thing is, I want to go through each of these key reasons, specifically number 1 and number 3, because these are reasons I was already talking about. And this first one about this FTX thing causing contagion, this contagion effect. Now, let me break this down for you guys. The contagion effect that people are talking about in this market right here is essentially where one company goes down, it almost like triggers a domino effect, and then many more follow. And an easy example of what this looks like is simply if you imagine that other crypto companies were leveraged with FTX products. Maybe it's the FTT token, or perhaps they had a bunch of money stored on FTX. If they've now gone down, they might not be able to pay what they owe, and if they can't pay what they owe, they're going to go bust as well, and that can mean more clients across different companies end up losing their funds as well, right? So that's kind of the contagion effect that people are talking about. And is it just that people aren't particularly worried? Well, I mean, to me, that doesn't make a whole lot of sense, because if we just kind of take a look at what's been going on with other crypto coins like crypto.com, let's just type in crypto.com here, and also take a look at CoinMarketCap. There's been, a lot of fear and uncertainty and doubt around what's been going on with crypto.com. I mean, if we take a look at this just on the kind of, I know the monthly time frame is perhaps a little bit too zoomed out, but I think we can get a really good gauge of this if we just kind of, zoom the market into what was going on back here. The price of the token trading at about 12 cents kind of before all this started to take place, and now all the way down to 7. That's quite a drop, guys. If we take a look at this on the candle chart, we can actually get a percentage reading of this. So we're looking at what was going on right here. And literally from this top to where we are now, this is a 43% dump within a week, and a little bit more down to its low. Definitely a huge drop right here. There's many others with this, kind of fear and uncertainty and doubt that are going around right now, but it doesn't necessarily seem to be affecting Bitcoin. And I think that's an interesting question, because again, the market's getting hit really hard right now, guys. I mean, there's a lot of reasons to be very, very worried. Contagion is a big one, right? Last time when Celsius and Luna and so on were going bust, people, I mean, it was bad. There was a huge domino effect. I mean, one went down, and then 3AC went down, and then Voyager went down. Or maybe I'm getting the order of events wrong, but these things kind of happened one after the other because the previous one was getting fucked, the next one got fucked as well, and that's not to mention the smaller ones that went down. I think these are very, very important discussions to be had, because with Crypto.com, I mean, this is that Martini guy. You guys know him, one of my British friends, mentioning that he's been trying to withdraw funds off Crypto.com. I mean, there's this huge effect kind of in the market right now where a lot of people are struggling to withdraw money from various different exchanges. Obviously, the ones that are still liquid, the key ones, you guys know the deal. I've been on Bybit, BitGet. These guys are pretty damn reliable from what I'm seeing. Obviously, I've got a lot of history with Bybit, and they're looking pretty good as far as I'm concerned. Links down below if you want to check them out, but that's not the point of this. There is a lot of this contagion effect going along, but again, it doesn't necessarily seem to be affecting the market. Now, the second one that Donald mentions here is it because smart people are scooping this up for the long term? That's something which we can actually analyze. And like I said, this is one of his 3 factors that I hadn't considered. We were talking about the other 2 already quite a lot, but this one right here, we can actually start to kind of get an idea of it, where generally when we're in a range where prices are trying to be kept above a certain level, we're going to see some pretty telltale signs, and generally that's going to be in the form of these kind of quick reversals that we've managed to form off these lows right here, right? These quick reversals will generally indicate that anytime the price is about to slip too low, it gets pumped right back up into the kind of mid-range, right? Ideally, you want the price to be trading in the middle of your accumulation range if you want to accumulate. Obviously, one man's distribution is another man's accumulation, right? To change up that phrase a little bit. And the thing is if you are able to push the price, kind of back up into, towards that middle line, then you can just kind of slowly buy a little bit, and then, push it back up, and then slowly buy a little bit every time it enters this mid-range again, and that very well could be what was going on in the past. Do we have that right now? I'm not really seeing that. Now, that's not the only telltale sign of accumulation, but it is one of them. Another big one is just, are we getting kind of big bounces when we hit the lows? And yeah, it looks like we are. I mean, these bounces are getting bought up. Clearly, some people think that this is a good time to be buying Bitcoin. I think that's an important thing to be keeping in mind. If we make these volume bars a little bit clearer to see, we can also start to build a picture of if there's a lot of green volume coming into the market as well. And let me just hide this right here. And you can see, a nice amount of green volume coming in right here on this pump, so that's showing me that there's a lot of buyers, and these are 2 very clean bullish candles right here, right? So to see volume here, you can't really make an argument that, okay, well, most of this volume probably came in from selling action, but the candle closed bullish. I don't think that's what happened here. I think buyers genuinely did step in. On this occasion, we didn't really see that, but we did see it right here. So there is some buying action going on. Now, the other telltale sign is just that we kind of, we get pushed into our ranges, right? So anytime we go a little bit too low, we get a quick pump up. Anytime we go a little bit too high, we get a quick drop back down. And the reason for that is, again, you want to keep the price kind of around some sort of midpoint like this. And as long as the price is around here, you can just kind of keep, gently pecking orders into the market, and that's another sign of accumulation. But again, I mean, this is quite normal price action. I mean, unless I'm missing something, I probably am because I haven't studied this extensively, but unless I'm missing something, guys, I'm not seeing necessarily huge telltale signs of accumulation. To me, this just kind of looks like normal price action. It is strange that we haven't dropped down, but other than that, is this just kind of accumulation? I'm not so sure. Honestly, I think if that was the case, we would have already pumped up. This V-shaped correction would have gone all the way back up if that was the case. The fact that we're still down is a bad sign, in my opinion. To me, it could mean that at best we get kind of like one more quick little, something like that, because generally we are going to be, setting lows a little bit like this, right? I mean, even if what it ends up looking like is something like this, but then we just kind of keep trading sideways, that would still be good enough. That would actually be a lot like what happened back in 2015, right? If I draw your mind back to, cast your memory back to what happened, assuming you were here back in 2015, it was actually 2014. This is exactly what it looked like previously, right? If we kind of replay the chart, take a look at this on the daily, we can get a really good sense of this where, the price really quickly just kind of spiked down, recovered back up quite quickly as well, but then we just kind of flatlined for a very long time. Look, if we play this forward, I've messed this up, haven't I? Oh yeah. So if we play this forward, you can see quite clearly, I think that you can see the price just kind of hangs around at this level. It goes up a little bit, we get pushed down. Anytime we go a little bit too low, we get pushed back up, and then for the most part we're just kind of trading sideways along this line. Again, when we push up a little bit, we get sent back down, and then we kind of test the low, and then we get sent back up, and again we just kind of keep trading around the midpoint. That's, to me, what accumulation looks like. It's very, very clear. And obviously, this is where the market really started to take off. But you can tell very clearly, anytime we start to deviate out of that, the market gets pushed back into that range, whether it means pushing it down or pushing it up. And to be quite honest, I mean, other than the fact that for me, I'm just not really seeing it. Another thing to keep in mind is that we haven't had enough time to develop that either, right? I mean, it's not going to be particularly easy to tell until a good, a little bit more time passes in the market. So that is going to be something else that I'm looking at. And then the third reason that Donald mentions here, and this is the main one that we've been talking about on the channel above all the others, is it because traditional markets are doing well. This is something that I think it's important to keep in mind because we are seeing, again, with the exception of what's just happened, some pretty big strength with the S&P 500 index and some pretty clear weakness on the dollar, and if we are looking at that kind of situation, well, here's the thing, right? I mean, Bitcoin has obviously been quite a bit towards the bearish side over these last days. Basically the last kind of 5-6 days, Bitcoin's been very much in the dumpster. And so, one thing that's important to keep in mind is that really bullish things, things that generally should have a really bullish impact on the market within a bear trend, it could just at best prevent the price from dropping down, and that is potentially what Donald has said here in point number 3, and that's what we've been talking about in nearly every video and live stream lately as well, is that it could be that this is playing some part on the market. It could be propping the market up. The fact that the dollar has dropped by so much, I think, is quite significant, and again, it has a fair bit lower that it can drop, right? If you've been subscribed to this channel, you've been hitting up the likes to make sure that you're tuning into this very rational TA, this level-headed TA. You're going to know that we were talking about how the dollar could end up sliding a fair bit lower. And that obviously should be bullish for the markets, but it hasn't quite played into the market yet. But again, where the market perhaps should be dumping a lot more, is it safe to say that this quite bullish thing for the market with the dollar dropping down isn't necessarily helping the price go up, but it's definitely potentially preventing the price from dropping down, right? I think that's an important one to look at, and that to me is probably going to be the most important one because ultimately, and 𝗪𝗏𝗏 actually says this down below, but it's something that I've been talking about a lot on my Twitter profile and a lot here on YouTube, is that what is it right here? The contagion names weren't Bitcoin and Ethereum. Basically, what he's saying here is that the other companies and projects that are potentially going to be affected by FTX's collapse are not Bitcoin, they're not Ethereum. Again, this is something that I was tweeting about just the other day as well. By the way, my Twitter is linked in the description. Go ahead and check it out if that's something you're interested in. But I literally said it a little bit down here. FTX going down is more evidence that Bitcoin and its decentralization is the answer, but I was even more specific about it right here, showing you guys that FTX is a centralization problem, not a Bitcoin problem, right? I mean, so whatever is going on in the altcoin market and in the crypto exchange industry and so on, it doesn't really affect Bitcoin, and I think that is an interesting take, which kind of dismisses, what Donald was saying for, potentially this point right here about, the contagion issue. Bitcoin isn't, shouldn't be affected by the contagion thing because Bitcoin isn't a shitcoin and it's not a project and it's not centralized, right? That kind of makes sense until you think about it a little bit more, because Bitcoin was initially dragged down with FTX, right? So why can't that happen again? You know what I mean? I think that's something which is an important question to ask. I mean, given that Bitcoin has already been dragged down with this, I think it's already suffered that contagion effect, at least to some extent. If it's done it once, and especially if that event when it took place was basically just 6 days ago, I don't think there is a whole lot preventing Bitcoin from doing that again, so that is something which I am going to be staying well aware of as well, because yeah, like I said, I can't say it clearer than this. The fact that it's happened once to me means that it definitely can happen again as well. So, I'd love to tell you that I have answers in this video, but I don't, guys. I don't know. I think the biggest factor that's helping Bitcoin right now is going to be this, kind of traditional markets thing, because ultimately Bitcoin has been so tightly correlated with the S&P 500, with the NASDAQ index and so on. And I still have to imagine that that's having some weight on this market right now. Ultimately, the kind of money that moves Bitcoin these days, it isn't, necessarily people that are just speculating on Bitcoin and things, unless things are really bad. But apparently, it doesn't seem to matter that much, because again, if we just kind of measure what kind of move we had from absolute top to absolute bottom, it was a 27% dump. And if we just kind of look at where we were consolidating, literally just 2 weeks before the rally, down to where we are right now, we're only down by 13%. Like it's really not that bad. I mean, we were swinging 13% fairly easily, in this market across the last couple of months, right? So I know this isn't like a particularly fair way to analyze it, because I'm just wiping out basically 2 weeks of data in this example. But I think it's, just to look at where Bitcoin was consolidating to where it is now, like again, it's just not that bad. And I have to imagine that, given that Bitcoin necessarily, it isn't necessarily even, like affiliated in any sense with FTX or dependent on FTX, I have to imagine that that kind of correlation with the S&P 500 and NASDAQ and so on, these indices, should continue. And I said this in the last video, everything, I've even said this on Twitter, everything we're seeing here will probably end up passing, right? I mean, this is how it always goes. Everyone is scared shitless. The market is down a few $1,000s. Dollars are dropping. Indices are rallying, and eventually this too, meaning the FTX drama and the contagion, shall pass. But if these, indices are going to keep staying strong when people just kind of start forgetting about this, because guys, with news cycles and stuff like that, people forget about shit really quickly. Obviously, like I said in the last video, people who are directly affected, they're not going to forget about this for a long time. But broadly, people tend to forget about this kind of thing pretty damn quickly, right? I mean, I don't even want to go into it, but there's so many examples of this, and it's quite it's quite common that this kind of thing ends up taking hold in the market. So I think these are some important factors to be considering in this market. And again, I don't really have conclusions to draw from this right now, but what I do feel like for sure is that there are some really nice opportunities opening up in this market. One of the situations that I'm looking at right now is Ethereum. This is something that I'm interested in trading purely because if indices are going to continue to rally, and given that Bitcoin has already moved up a little bit, I do think that Ethereum potentially has a bit of a chance to shine. And the thing is that if Ethereum is able to clear this resistance that's about $100 above where we are right now, it could be a fairly easy, quick jump up for Ethereum towards that 1550 level. I know that's a little bit far away right now, but it is something that I'm looking at. And I think that kind of could open up some really nice opportunities in these markets. Bitcoin as well. Ultimately, I've been making some fairly bullish videos, but we're still in a downtrend, so there's quite a bit of resistance. 18.5 I think could be quite an important level for Bitcoin, because this is pretty much the low that Bitcoin was setting over these last weeks and months. So if we do manage to get back up there, I think there's going to be a lot of liquidity, in that area, potentially a lot of people trying to exit their positions, so even a little deviation above and then coming right back down, I think would make a lot of sense. So there's a lot of plays in this market. And guys, the really cool thing about the two exchanges that I've been talking about, BitGet and Bybit, is that they're offering you some amazing bonuses, right? BitGet's bonus is so fucking easy to get. All you have to, I know not everyone can do this, but broadly speaking, if you compare this to what other exchanges are offering, all you have to do is deposit anything over $4,000 and trade a little bit to get a $400 bonus. That's a 10% bonus. Nobody is doing that right now. Very, very easy to get that money, and you can just chuck this into anything you like. That's your money. If you make profits, you can withdraw it as well. Bybit is obviously going 50 steps crazier with this crazy $30,000 offer, but crucially, this, it's obviously not 50 steps. I haven't done the math, but crucially, this isn't as easy to get as BitGet, right? So you need to deposit $250,000 and then trade to get this bonus. But with BitGet, it's a lot easier to get, So I think this is really, really cool, because there's a lot of cool opportunities in the market, and to be able to trade just one of them or a few of them risk-free is pretty crazy. I think that's well worth taking a look at if it's something that you're interested in, especially because BitGet is available anywhere in the world without a VPN and without KYC. And guys, I also want to highlight that they've got this 𝐂𝐶𝐺I competition running right now. Let me see if it's on the homepage. This isn't something that I would particularly look at doing myself, but it is worth checking out because they are offering, okay, I need a VPN to, oh no, I don't. I don't need a VPN. What am I talking about? I've been saying this for so long. Right here, you've got some potential prizes that you could be winning, including an iPhone Pro Max. That's not particularly interesting, but there are some bigger bonuses if I'm not mistaken. So these are well worth checking out as well. You just get free money potentially. You don't stand to lose anything if you don't win in these competitions, but if you do win, you do potentially get some really cool prizes. So guys, just check that out if it is something that you're interested in. BitGet is going to be putting out a Merkle-Tree proof of reserve thing. Again, I keep saying I'm going to talk about it. I haven't gone around to it. I'm super busy these days, but they are going to be releasing that, and Bybit is doing the very same as well. So for me, this is super important. I'm a trader. I care about where I put my money. And I'm basically in your boat, right? I mean, I use these platforms. So for me, it's absolutely essential that these are safe places to be putting my money. And that's why I've chosen these two guys. So and Bybit I've been with for so long. Never ever had an issue. Obviously, BitGet is a little bit newer to the Western market, but still no issues with them. No VPNs, no KYC, very high withdrawal limits. I mean, it's great flexibility at a time like this, so well worth checking it out. And again, with this kind of bonus that's available right now with this 𝐂𝐶𝐺I special, I just think it's something worth checking out if you want to get some more free prizes or whatever. Like I said, there's no downside for entering this stuff, and bottom line, you get paid to do this. So if that kind of stuff appeals to you, then you know what to do. And if you want to get inside of my group where you can actually watch me trading, see exactly what I'm doing in real time, then the steps to join are right here on screen. Just click on each of these red boxes and that will take you inside. Just a link in the description that's going to take you to my free Telegram channel where I give you more analysis from myself and my team around the clock. Click on my name and then send message to ask me how to get in. If you have enjoyed this one, you know what to do. Hit up the like, subscribe, tick the bell, and I'll see you all in the next one. Cheers.